Hi all, today we're going to talk about Nvidia. They have recently released their latest numbers. The numbers are quite amazing. They beat the market expectation on the revenue side, they beat the market expectation on earnings per share side, they released amazing guidance, and they have actually announced that they're going to buy back $50 billion of their stock. Despite all that, the stock has tanked about 10% from the day of the announcement. So today we're going to take a deep dive into the numbers of Nvidia. We will talk about every single number. What does it mean? What does it mean for Nvidia's future? We're going to try to explain why Nvidia stock has dropped. And at the end, we're going to kind of explain how we're thinking about the stock, when to buy it, when to sell it. Before we begin, before we dive into our numbers, press a like button on this video. It helps us immensely. It helps the channel grow. And I think if we get around 50 to 80 likes, this video will get bumped to a wider audience, and this way we can share this analysis with everyone. So let's dive in. A couple of days ago, Nvidia has reported their latest quarterly results. Right now, Nvidia is in Q2 of 2025. It's a bit weird, but Nvidia is in 25 right now, so just get used to it. The company guided for the revenue of about $28 billion. The analysts were not really having it. They thought that Nvidia has sent back their numbers and kind of lowering it on purpose. And Nvidia actually reported more than even what the analysts were expecting. So again, Nvidia was guiding for 28 billion, analysts were expecting 28.7. The company announced $30.04 billion for the revenues in this quarter, so beating all of the expectation pretty handsomely. This is actually something which the company does quite frequently. It beat their revenue expectation for the last 5 years, I think, every single quarter. So Nvidia is lowering their numbers which they're expecting to get, and then they come up and announce that, hey, we have a surprise, we earned much more. They're doing it all the time. This is kind of reminds me of what Microsoft were doing in the 90s. So I think then they beat the expectation about 39 quarters in a row until analysts somehow understood that, hey, the company is lowering the numbers on purpose. Nvidia have brought about $30 billion in revenue. Their earnings per share again was better than expected. The company guided for around 65 cents per share, and the earnings number at the end was 68 cents per share. With all that, the company has announced that it will buy back about $50 billion of its shares. So why do companies do that? Sometimes the company have a lot of cash and they don't know what to do with this cash. So Nvidia right now is already investing in all of the projects they wanted to get. They cannot really go and buy any big company. So Nvidia cannot go and buy, I don't know, Intel, for example, because it will never be allowed under the antitrust laws. So the company, what it does, it just gives money back to its shareholders. And they can do it in one of two ways. They can either issue dividends, which Nvidia kind of already does, but the dividends are really small and we're not going to talk about them in this video. Or the company can say, hey, we think our stock right now is undervalued and we think we can go and buy the stock for ourselves. And this is what Nvidia has been doing from the last year. Last year they have announced a buyback of $25 billion in stock, and this year they said that they are going to go and buy back stock for around $50 billion more. So they're going to buy around 2.5% of overall shares outgoing. This is one of the best indications of why we think the Nvidia shares are undervalued. The company themselves, the company who actually knows all of its financials, knows pretty much where it's going to be in the next couple of years, the company itself allocates a lot of money to go and buy back their own shares. So the next number we're going to talk about is gross margin. For those of you who are not sure, gross margin is revenue minus cost of revenue divided by revenue. What it shows how much, first of all, you are controlling the pricing of the things you are selling. If your gross margin are really low, that means that you have a lot of competition and you cannot sell for higher prices. Second thing which it shows is how much you control the cost of revenue, the things you are selling. Again, if your cost of revenue is high, gross margins will be pretty low. So for Nvidia, gross margins for this quarter is about 75%. It's a little bit down from the previous quarter when it was 78. And by the way, if you're seeing a bunch of analysis why Nvidia is overvalued, one of the things that they are saying is that the gross margins are falling. I would not go that far. The fall from 78% to 75 is not that big, first of all. Second of all, if we're looking at the sector average, the sector average for gross margins is about 49.5%. Nvidia have 75. So what does it tell us? It tells us that Nvidia are probably the best in the whole sector in controlling the pricing of their goods. First of all, they can put really high prices and people are still going and buying their stuff. By the way, one of the things in Nvidia's guidance for their projection for the rest of the year, they have said that the gross margin for the whole year will be around 75%. So we're not expecting this number to drop any lower. For now, Nvidia controls the pricing, they're controlling the cost of this pricing, and the company is in full control of things that it's selling. Next thing, let's talk about Nvidia's guidance. So every time the company issues its financial results, it also issues guidance or the projection for the next quarter or for the the whole financial year. Nvidia's guidance for next quarter, so for Q3, was much better than everyone was expecting. The analysts were expecting revenues of $31.75 billion. Nvidia guided for 32.5, but we already know that they're lowering this number on purpose, so I would actually think that Nvidia will bring about $34 billion, something like that. Again, their margins, they are expecting that will be around 75%, and these are pretty good numbers. In addition, the company said that Blackwell chips, which were delayed a little bit this year, they are already starting to ship to some of the customers, the samples of these chips, and the major chunk of revenue from Blackwell chips we will see in Q4 already. A few things about Blackwell chips and what does all of this mean. So right now Nvidia has this technology or this line of technology which is called Hopper. So if you read some articles about Nvidia, everyone is talking about these H100 chips which they are selling to all of the major customers. So H stands for Hopper, and for now this is the best technology in terms of GPU we have on the market, and it's best by a large margin. So Nvidia controls, by the latest research I've seen, about 98% of data center chips, and Blackwell supposed to be a huge upgrade to the Hopper technology. So Nvidia is not only keeping their technological advantage over all of the market, it actually increases them, and we will see that in Q4 this year. So just to give you some understanding about Nvidia's placement relative to the semiconductor sector, let's take a look at some of the numbers we have. So first of all, revenue growth. If we're looking at this year alone, the semiconductor sector grew about 3.3% in terms of revenue. Nvidia grew 208%. Earnings per share for the whole sector, the growth was 2.7%, which probably tells you not to open semiconductor business. It's not really profitable, at least not this year. Nvidia grew 800% in terms of earnings per share this year. So we see the company which dominates the market so much that the higher than expected pricing is expecting. You're paying for quality and you're paying for growth. People who are arguing that Nvidia is overpriced often point to PE ratio. So PE ratio, for those of you who don't know, you take the price of the stock and you divide by earnings per share. The lower the PE ratio is, the more undervalued or cheaper the stock is. So for the whole sector, PE ratio, the average PE ratio is 23.3, Nvidia's is 56.8. People who are arguing that Nvidia is overvalued basically pointing to this number and saying that Nvidia is twice as overvalued as the whole sector. But they are missing one key ingredient, and this ingredient is growth. When you're looking at PE ratio, you're disregarding growth completely. In order to bring the growth into the whole equation, we need to take a look at something called PEG ratio. PEG ratio is basically PE ratio divided by growth. And this is important because if you take two different companies, one with PE ratio of, let's say, 10, and it doesn't grow at all. The second one with P/E ratio of 50, but it doubles its earnings every year for the next, let's say, 5 years. Of course, the second company is the better investment, but only looking at P/E ratio would not tell you that. So in order to do that, we're looking at the PEG ratio, PE divided by growth. And if we're looking at PEG ratio, what it was this year, so if we're looking from September 2024 to September 2023. PEG ratio for the whole semiconductor sector was about 0.86. PEG ratio for Nvidia was about 0.09. And this is of course attributed to the huge, insane growth of Nvidia's earning during this year. If we're looking at the projections for the next year, the PEG ratio for the whole sector is about 1.89. So it's pretty expensive. I would say PEG ratio above 1, usually this is expensive. Software companies have PEG ratio around 1.7, 1.8 because they have big gross margins and they are more profitable. So Nvidia has PEG ratio 1.2. So even relative to the whole sector, Nvidia is growing much faster, has better margins, and it's cheaper if we're looking at the PEG ratio. By the way, a couple more things to show you just so you know how Nvidia is compared to the rest of the market. There is this thing which is called net income margin. Basically, you take the whole revenue and you see how much of this revenue is actually net income. So like gross margin is the revenue minus the cost of the revenue, net income margin is the revenue minus the cost of the revenue minus all of the salaries that you need to pay, all of your investments, all of your taxes, everything. So basically you sold something, how much of what you sold is going into your net profit. So for the whole semiconductor sector, net income margin is 3.7%. For Nvidia, it's 53.4%. So Nvidia is just cash machine who keeps printing money, and from what we see right now, it's not going to stop in the next quarter and probably not in the next couple of years. One more interesting metric, so this is not really financial, but this is something just, I don't know, for the laughs. I really like this. So I found this metric which is called net profit per employee, and this is just something interesting. So how much is your company bringing per each employee? So in the whole semiconductor sector, this number is around $6,000 per year. For Nvidia, this year it was $1.44 million per employee, which shows you that the company is very profitable. It controls its pricing, controls the market, and it utilizes the employees very sufficiently. So it doesn't have a lot of people in the company, but they are bringing a lot of value. Now let's talk about the kind of behavior of the stock and the pricing of the stock and what we are expecting it to be. So I don't know what you heard on the day of the Nvidia's announcement, but we actually had people who are not related to the stock market, not this savvy investor, calling us and asking us about Nvidia's earnings on the day of the financial results. This shows you just how much buzz was there around these earnings, and I really think that had Nvidia go and said that it had missed the earnings, we will probably be in some kind of the correction right now. Probably Nvidia would drop violently, and I think the whole market would drop as well. So the whole kind of nervousness around Nvidia's earnings, we are still feeling it right now. The stock has dropped something like 10% after the results announcement, and this is okay because I think right now we are going to climb back because of the few things. First of all, the last time I've checked, none of the analysts have revised their target prices for Nvidia for this quarter yet. This will come, and every time some analyst goes and says that Nvidia is going to 160 or 200, or I think we have even seen 250, right? Yeah, so every time analyst goes and revise its target price for Nvidia, it gives a little boost for the stock. Enough analysts who are making these predictions sends the stock flying. That's first. The second of all, we will see the reaction of the customers for the Blackwell chips. For now, we haven't heard a lot about them, about their performance, but we will really soon, probably this quarter already. So we are holders of Nvidia stock, and our plans for Nvidia stock is pretty much as follows. If it goes below 110, we are buying the stock and continue buying it as long as it stays below 110. Our target price, we have made a video about that. Our target price is about 161. So when it goes above 161, we probably will start selling the stock. I'm not sure if it will go there by the end of the year. It will definitely go above 140, 145 if we don't have some kind of a major recession coming in the next couple of months. Thanks for being with us. Please press the like button if you like this information. Subscribe to our channel. We will have more videos like that coming up, and we will see you in the next video. Take care.